What will the apes do now? Joining me now is the host of Trey's Trades on YouTube, Trey Collins. Trey, obviously you've been a strong advocate for what I call the Reddit investor revolution, and you know the move in AMC. You always say it wasn't about near-term fundamentals. In the financial media, they still don't get it. You know, they compare it to, look at the market cap versus this company and that company. Tell the world, tell the financial media what this has always been about. What is this movement about?
Well, Charles, first off, I'd like to extend a thank you for giving the opportunity for millions of apes to be able to speak out about the culture and story, being written by AMC stock right now. I think they're getting the wrong picture with this this whole segment. We understand perfectly clear that this is not about fundamental value in this moment in time. They're viewing this as black and white when that's not the case. This is a message. This is a legacy that the apes are trying to write right now to send a message to the short sellers, hedge funds, and institutions who have been blatantly betting against and frankly, taking advantage of the institution. The retail investor, over these past 6 months, year, 5 years, 10 years, and show them that we are stronger than they think we are. We're smarter than we think they are. And, we're better. That's as simple as it is.
And now, of course, you're going to have a second interview with AMC CEO Adam Aron tonight. I think the lawyers, by the way, pressured him into that statement. Let's not forget, he made a serious overture to investors yesterday. I'm pretty sure someone called him up and said, listen, you're going to have to come out with something. So with that in mind, do you feel like he let the community down with that statement this morning?
That's a great question, Charles. I think Adam Aron does a perfect job of managing the long-term growth of the company as well as paying attention to the short term of what the retail investors are looking for. In fact, I think he sets the bar. I think he sets the standard. It's very easy for the media to talk about that statement that he put out. But what about the Investor Connect, the AMC Connect that came out that helps connect the AMC investors and reward them for following the company? I think there's so many great things that Adam Aron does to focus on, one specific statement that likely was caused to come to fruition because of legalities is doing him injustice. He does a great job. He sells stock at the right time. He's generated a lot of cash. Cash is king. You already stated earlier, there is $587 million for the company, and the stock price is booming. I think that speaks monuments of how great of a CEO Adam Aron truly is.
Considering all the negative media, right, which is almost all the financial media, how important was it for AMC to sort of climb off the canvas today to just keep everyone kind of stoked and confident?
Right. So the last 6 months has been a slow windup to kind of the storybook that you're reading right now on the charts. And I think over that period of time, there's been a lot of the retail investors or the apes who have been studying, doing due diligence, crunching numbers, and I think most importantly, emotionally preparing themselves, because the last squeeze that happened back in January, there was, I think, a lot of things to be learned. And this much time built into now, I think people were emotionally prepared for the sort of moves that have happened here. And to have that momentum continue, obviously, is a great opportunity to give some good momentum and hype to the community. I mean, that's ultimately what it comes down to, is keeping spirits high, keeping the new apes out there who've joined the community happy, and telling those stories.
I got less than a minute, Trey. Just tell us, what is the end game?
So the end game for this, Charles. The end game for this is pretty simple. We want to send a message to the short sellers that says, look, we are the dumb money and we are proud of it. We are here to show that when people do their research and their due diligence, they can make money. They can call us dumb money all day long, and we'll endear that term, because people have their own reasons, their own whys, whether it's for the long-term investments of the company, the short term, which is I think the majority of people, they have stories that they want to be understood and told. And I think that's ultimately what this comes down to, is coming together for a good cause and showing the world that, look, the apes are here to stay. They're not going anywhere. There's bulls, there's bears, and now there's apes. Simple as it gets.
Trey, my man, can't wait to watch your interview with Aron, and congratulations. You've been there from the beginning. You've been strong, and a lot of people look up to you, and so do I. Talk to you again real soon. Coming up. All right, the Reddit investor revolution, it continues to make headlines, and the pool of names, by the way, continues to widen and they're being swept in. Now, moments ago, just about an hour and a half ago, it got the attention again of the SEC. Of course, they've been looking into this, but now it looks like perhaps Chairman Gary Gensler, who kind of alluded to this at the Piper Sandler conference, that there are considerations being made now for changing the rules on how U.S. stocks are priced and traded. Now, that could include shortening settlement cycles. I want to welcome back to the show the host of Trey's Trades on YouTube, Trey Collins. And Trey, you know, part of this is faster settlements. We know this T+2 is a long time for stocks to settle. It allows for a lot of hijinks, a lot of shenanigans by hedge funds. Your thoughts on maybe a T+0 or T in the evening, getting these trades settled much quicker? What would that do for these shorts to prevent this sort of shorting that we're seeing?
Hey, Charles. Well, first, I'd like to, thank you again for letting me come back on to Fox Business to chat with everybody and represent the apes and the retail investors. It'd be an awesome opportunity because I think what is lacking that Wall Street and the big guys have is opportunity to have information very quickly regarding different short interest data and analytics and what's actually happening in the cycle. Here's a fact. Ortex, which is a short interest data website, has a T2 cycle, meaning that we have 2 days until the return shares on any sort of loan are reported to the average retail investor. And what's sad about that is that the average Wall Street guy will get that information much quicker than the little guy over here on the streets will. It would be a huge, monumental sort of shift that would happen, and it gives some more, availability and free market to the retail investor.
What about, would it do anything for naked shorting, or or do they just simply have to enforce the rules for that?
So naked shorting, it's funny, Charles, because I saw on CNBC that Melissa Lee had slipped up and talked about naked short selling. Now, this is something that the retail investor and the apes have been talking about for about 6 months now, watching, AMC stock particularly. This is blatantly happening. And there are a lot of rules and regulations that are coming out, and a settlement time of T0 would definitely crack down on a lot of this naked short selling. The system is built in a way that these guys can get away with it. In fact, they slipped it up so easily on CNBC that it didn't even seem like a big deal. It was nonchalant. However, it's an illegal practice, and that illegal practice needs to get cracked down on.
I also think there's an interpretation from Gensler's comments of greater transparency, like payment for order flow. A lot of people were shocked about it. The experts on Wall Street say the investors should be thankful for it. It's never been this cheap to do a transaction. But it feels unseemly, right? This sort of almost cannibalistic nature of these relationships. Would you like to see greater transparency?
Oh, 100%, 100%, Charles. You'd love to see transparency. That's the issue with what you see happen on some of these big Wall Street firms is they're not transparent in the least bit. You can go through a variety of different ways, whether it be dark pool trading so that, different brokers will go through a dark pool system and you don't have to have as much transparency. For the inkling of a cent, like a tenth of a penny or 100th of a penny transaction gain. I mean, that in and of itself speaks volumes about how much these guys want to hide a lot of their transactions, particularly regarding short selling.
Trey, I got to get this in, but I don't have a lot of time. I want to talk about the Reddit community itself for a moment, right? Yesterday, someone posted a link to an SEC S4 amendment filing. It was from Northern Star Investment Corp. 2. And it pointed to a legal proceeding on page 186. Now, part of it read, plaintiffs allege that APES, along with over 30 other brokerage, trading firms, and or clearing firms, including Robinhood, Barclays, Citadel, and DTCC, engaged in a coordinated conspiracy in violation of antitrust laws to prevent retail customers from operating and trading freely. Now, to stop losing money on short sell positions. That's what it read. Listen, we're not lawyers. I don't want to speculate on this case at all. I just want to say, to me, it's impressive. The Reddit community, how they unearth things like this. A filing, an innocuous filing, page 186. Why do the pros keep underestimating your intelligence and how committed you are to this?
I think these pros, the people who quote unquote are smart money, don't understand that the retail investor is not stupid. The average person out there can put together a lot of different resources, due diligence, crunch numbers, whatever it may be, and find out some really cool things. This is news, but it's not new news. These are things that we have uncovered over the last 6 months as individual retail investors doing research on the stock. Here's a fact, and this is something that brought me to believe that this could be happening, is the heavy leveraging, the margin debt that you have in the economy right now, the U.S. stock market. There's $847 billion of debt coming from margin in the stock market, and the majority of that, almost $200 billion, has come in the last 6 months. That is not a coincidence. These hedge funds are playing with fire and eventually going to get cracked down on, and that's as simple as it gets.
You got to work with me, Trey. Real quick, the greatest risk to this movement, is it regulations? Is it investors running out of money? Is it the Federal Reserve hiking rates or something else?
Is this towards hedge funds? Risk towards what party, Charles?
No, toward the Reddit revolution. What's their greatest risk?
Oh, absolutely.
I gotta go, but tell me.
Absolutely. Yeah, no problem. So I think the greatest risk is infiltration. There's no stranger to the note that these big hedge funds and firms will pay people to infiltrate the community and act like one of us. We have to watch out for those people and recognize that this is not the normal way and stick true to your convictions. Simple as it gets.
All right. Trey, thank you so much for sharing your comments and good luck on everything. So I got a great book I want everyone in the Reddit community to read. It's called The Great Game, The Emergence of Wall Street as a World Power from 1653 to 2000 by John Steele Gordon. It's a great book. Chronicles a whole bunch of success, but also a lot of scoundrels are in there, right? One guy named Jacob Little, he's described as one of the earliest and most successful practitioners of market manipulation, making his fortune by leveraging both short sales and short sellers. So how worried are you that the hedge fund community is sneaking into your world? They've got a list of short stocks. They can sort of put out a few things, try to pump it up for a quick trade here or there.
Well, first of all, thank you so much for having me back on the show. More than happy to represent the Ape Nation here. And I agree with Trey in terms of media, of what's going on. For example, in terms of video media, there's all these, I guess, Wall Streeters with their fancy accolades, their fancy degrees coming on, just for AMC, for example, saying that it's overvalued and fundamentally it makes no sense. And right there, that alone, they're missing the point. Right here, we're in this for a momentum trade, a swing trade. Right. We're seeing what's going on with the shorts. And then that's just the video media of saying, like, fundamentally, I don't think they get what we're going for. Written media. Today alone, I read an article that was AMC insiders sell $4 million worth of stock. I get it. That's a big number. It's a huge number. But when you look into it, that's 100,000 shares, and the stock now trades over 300 million a day. It's below a drop in the bucket. And then in my realm, more of social media, between YouTube, Twitter, Reddit, there's all these faceless accounts with the exact same message. So across all these different forms of media, I very much believe that there's like a coordinated campaign kind of working against us. But does it bother me? No, just because of how much I believe in this movement, and I'm just fighting along with my fellow apes.
Okay, and on that side, I know they're trying to talk it down, but also just sneaking in there with you take a list of shorts and you see a name that's 30% short, maybe you can get a spark. But I know that the community is looking out for that. I do want to ask about SEC Chair Gary Gensler. He made a lot of comments yesterday hinting at some form of regulation. Some think he may curb excessive shorting, certainly payment for order flow. The establishment, though, is taking a different read, saying, oh, no, they're going to stop the sharing of information, somehow figure out a way to regulate what people say on message boards and things like that. What are your thoughts?
Yeah, so for the people in that latter group, if you ask me, doesn't that sound dangerous? Stopping the sharing of ideas? To me, it's almost an argument of, like, potentially in the realm of against free speech. I mean, very seriously, what is the difference between a Wall Streeter publicly sharing their idea and a regular person like me just like posting it socially? Like, I just don't get it. I don't understand the obsession with, like, don't forget, we're just dumb money. Instead of the obsession on us, why not, I don't know, attempt to look at things such as payment for order flow? Why not try to even the playing field and one set of rules for dark pools, for retail wholesalers? I just extreme transparency with brokers, with prime brokers. In a general level, I don't get the obsession with us. Why not take a look into the potentially illegal or maybe just nefarious actions of the cronyism on Wall Street? That seems like a much bigger fish to fry than us.
Matt, I've seen this so many times. I remember when the SEC went after all the penny stock firms, put them all out of business, and at the same time, these other entities were growing like crazy, called Enron, called WorldCom, called Bernie Madoff, who was part of the SEC. All of that stuff was growing $1 trillion in risk, and they were going after the little guy because that's how they do their job. All right, Matt, thank you so much, my friend. We'll talk to you again soon. Now, there's so many ideas, so many great guests.